Hi, I'm Tim Carstens, the Managing Director of Base Resources, a pure play mineral sands company with a highly cash generative operation in Kenya and a significant development opportunity in Madagascar.
Hey Tim, good to see you. Haven't seen you since March. I thought it was time for a catch up. Just saw the second DFS come out on Toliara Project, some pretty big numbers in there, and we'll get to that. What do you think's happening in the market at the moment? You've had a kind of sideways year. I know you've been busy, and we're going to get into that in a second, but it's been a sort of sideways year. You've had a bit of news coming out of China recently. Do those things affect you?
We're looking at sort of the macro side of things. From a market perspective for us, it's been an extraordinary 12 months. If you go back to April of last year at the commencement of sort of the COVID pandemic, there was an expectation that our products, which ultimately majority of them make their way into pigments and ceramics and very very much consumer oriented, we're going to crater as the world sort of slowed down, and we've actually seen quite the opposite. We saw 2020 consumption of pigment up 6% over 2019. We've seen it continue to go from strength to strength since. We're in an environment that is significantly supply constrained in all three of our products of ilmenite, rutile and zircon. And when you look out over the horizon, it is a structurally short supplied market that has got downstream customers really starting to think about how they put their foot on supply and indeed how they facilitate new supply into the market, which creates some pretty interesting opportunities for us. One with a big cash generator in Kwale now, but also a very scalable project in Madagascar.
But talk about the China influence on you, because obviously it's a big market for you guys. Things like Evergrande coming out, the West is saying, oh my goodness, this could be the catalyst for economic crash. What's the reality on the ground that you're hearing with conversations about, the size and opportunity of the market for you guys going forward?
Yeah, we're still, the best guide for us really comes from what our customers are saying to us. And one thing I just should clarify is that the majority of our revenue doesn't come from China. The biggest volume being our ilmenite goes to China, but by revenue, 75% of our revenue comes from elsewhere. So we're much more exposed to the Western market, if you like, than China per se. But as far as sort of what's going on in China, we're best guided by our customers and looking at their expansion plans and what they're looking to do with their businesses. And that is a pretty strong indicator for us of longer term health.
Absolutely, and those plans were what they were up until say a couple of weeks ago, when the news out of China was a little bit negative. People are unsure about what's going to happen. There's announcements coming out soon. I mean, are people sort of treading cautiously there, or is it just too early to say? Just in terms of market feedback, you're on the ground.
I don't have any direct feedback, as a consequence of that. I'm not feeling that at this point.
Okay, fine. Okay. Well, let's talk about what you have been up to, which is trying to expand the life of mine in Kenya. We'll go with East Africa first. So what have you been up to since March, since we last spoke?
Yeah, so obviously one of the challenges with Kwale when we developed it back in late 2013 or operationalised it was it's got a relatively short mine life. It was 10 or 11 years. So in order to extend that, what we've been working on has been the identification of additional ore sources and then the pursuit of tenure arrangements over those. And those who have been following us for a while would be aware of the long-running saga of the SML extension with government. And it's been a very frustrating, slow process in that we kind of reached agreement on it some time ago, but we finally managed to land the documentation a week ago. And so we now have tenure in place to take us through to the end of 2023. The other thing we've been doing is working on studies looking at the North Dune and an area we call Bumamani. We put out a pre-feasibility study on the whole thing, came to the conclusion that it wasn't going to be economically viable as a totality, but did identify a subset that would make sense. So we've progressed that through a specific study, got that out a couple of weeks ago, and that's showing us ore through to around July 2024. Really looking beyond that will either be determined by exploration success or potentially by economic circumstances when we're out there. So if prices are better than we currently are forecasting for the purposes of our studies, there is the opportunity to progressively step that Bumamani North Dune area out because it, as I said, subset of a much bigger dune. Probably the biggest value or mine life extension opportunity comes from the Karunze area, which we have been talking about for a while. And the reason we've been talking about it for a while without actually doing any meaningful exploration on it is that it's been held up with a moratorium on the issuance of new licences in Kenya. So we've been waiting for the licences to be granted. They've been moving their way through the approval process. Most of them have passed the Mineral Rights Board approval, which is important, but they can't be issued as licences, so we can't get going on the ground. We're hopeful that moratorium, or at least an exemption to it, might be forthcoming reasonably soon so that we can get on the ground and start exploring. We'd also applied for the ground in the same sort of geological setting across the border in Tanzania, because these Karunze licences run right up to the border. We applied for those 3 or 4 months ago, and they've been now granted. So we have tenure across the border. We're in the process of standing up our exploration crews to get going in there. And that's the area we're pretty excited about, that has the potential to extend our stay in East Africa most materially.
Okay, just a few things there. If I go back to the PFS, how do you get from a PA to PFS and then work out the economics don't stack up? Was it a very fine line, that decision making? Could you not work it out at PEA stage?
What I was saying was that we did a full PFS, and the PFS on the full dune, which is 116 million tonnes and enough mining for 8 years, it's very low grade. And so it identified that the mining of the whole thing was not going to be viable. What we then did was identified from that there was a higher grade subset that would be likely viable, and we had to have a look at whether that, as it came together as an operational whole, would be economically viable, and that's what the Bumamani PFS identified.
Got it. Okay, but at some point, if the economics change in the marketplace you could go back in on the full chain.
There could be opportunity to just progressively step it out a bit, but we would need to see how the world looks at the time.
Right. Okay. So talk to me about, obviously, Tanzania, new jurisdiction, new country, new opportunity, and they seem to move a little bit quicker with the licensing. It's a nice place to do business. What's the order of play? Does that change slightly for you, given what you're seeing with this moratorium at the moment? Do you say, well, actually, time to move up sticks and move?
Well, look, I mean, the way we're looking at it is it's the whole Karunze area that's of interest to us, straddling the border, and kind of it's slightly annoying there's a border in the middle because it creates complexity. But the way we're looking at the Tanzanian side of it is, it's an opportunity to get in there and to understand the nature of the whole area. So it gives us a good window in. It's not that we're naturally shifting our focus to Tanzania. We're pretty confident we're going to get the whole package reasonably soon, but it's an opportunity to get in there and start understanding what it really is. Because at the moment, our understanding of it is based on surface reconnaissance and a bit of work we've done with some adjacent licence holders.
So can I come back to the moratorium? And this is a countrywide thing, mining generally, or broader than that? It's not a base resources thing, right?
No. It's a whole of mining, whole of industry moratorium that was put in place at a presidential level. Why
is that?
The chairman of the Mineral Rights Board, that is one of the key steps in the approval of licences, he had some material concerns about the basis on which some licences were being issued, and felt that governance needed to be cleaned up. And so he made a request to the president to suspend granting until that could be sorted out. Now, as is often the way with these things, it takes longer to sort out than you think. And so here we are now, best part of 20 months actually since it was put in place.
Correct. Is that going to be slowed down by these Panama Papers? I think the president's got some questions to answer himself, hasn't he?
I don't think that'll have any impact on it.
We'll sit back and see. Okay. So not, you may get an exemption. Can you speed that up? Can you affect that in any way, given that you're long-standing and the fact that you're employing people and you're producing?
Yeah, look, we're certainly working to try and facilitate that. There is support for the lifting of the creation of exemptions. The chairman of the Mineral Rights Board has actually made a request, a formal request to have an exemption of the moratorium put in place for some of the key players so that the industry can actually move forward. So we'll see how that plays out. There's definitely support for that because there's wide recognition of the fact that has just ground the sector to a halt.
It must be frustrating for you, given the highs that you saw last year. You know what you've got to do. It's a fairly simple process, and technically, fairly simple process, just add water, as I keep saying. And there seems to be a lot of it, and you're going through your studies, which is great, and yet you're being held up sort of by the paperwork, as it were. And because we're about to have the same conversation with regards to Madagascar in a second, I suspect. So, what's your message to the market? Do you say, look, we know what we're doing, we got the scale there, we just got to go through some steps. It's reasonable in mining to expect delays. Yeah,
look, I mean, those sort of administrative processes, anyone who's had any experience working in Africa, would understand that they can take, quite a lot longer. And, quite often there's a sense of if it isn't urgent to be done today, well, let's leave it. And so these things can take a lot longer than you would like. They can they can be a lot more challenging than you would like. But one of the things in our 10 years or my 11, 12 years now of experience in Kenya is that at the end of the day, Kenya always acts economically rationally. And more often than not, there's nothing untoward in any of the delays. It's just simply a process where people have a different sense of priority to what we do. So there is a need to be patient and a need to be slightly cynical, but trusting.
Okay, and I'd agree with that. With regards to how you can expedite things in Madagascar, you've had a little bit of outside input in terms of around the royalties and so forth. If you did something like that here in Kenya, would that be seen as a negative? Is it something that you've been thinking about or considering?
Sorry, I'm not quite clear.
Well, just in terms of could you go back? Could you go to the African Union? Can you go to outside help, whether it be other organisations, international organisations who could not put pressure on, but at least help with the Kenyan government decision making?
There's no need for that in the context of Kenya or indeed Madagascar. I mean, what we really hope to see, and we've been really pleased with the role that the IMF and the World Bank have played in Madagascar in helping understanding and ensuring that you've got a government that understands how it benchmarks against other countries, how it needs to maintain competitiveness in order to attract investment, and understanding what the real limits are of the fiscal returns you can expect out of a mining project. And that's the role they've been playing very strongly in Madagascar. In Kenya, it's not really. We don't need any outside assistance. It's just continuing with the engagement with the government, with whom we've got a extremely robust, supportive, collegiate relationship with ultimately.
Right, and you think so ultimately, if that does get resolved, what you're seeing in Kenya and now in Tanzania, you're going to be able to extend the life of mine and the numbers till when? I mean, what should we be as investors looking to you to try to achieve there?
It's far too premature for me to be speculating on what we might find. We simply haven't done the work yet. I mean, what I can say is based on the studies we've done, including Bumamani, is that we can see all through to July 2024. Anything beyond that is going to be subject to exploration success and too early to speculate at this stage.
Okay, but that path forward is funded from cash flows, no dilution, no more market.
Oh, absolutely. I mean, Kwale generates an awful lot of cash. I think last year, it was 65 million in net cash. And the move we're talking about as far as the Bumamani extension is not capex heavy. It's really moving equipment, and one of the biggest costs is just the land acquisition process.
So 2024 doesn't sound like very long away. Is it a meaningful addition to you to kind of get to 2024? I mean, should we be looking at it like that?
Yeah, certainly. I mean, compared to where we were without it, it's a meaningful step out. Probably more significantly is that it just gives us more runway to be able to bring, to identify additional ore sources and bring them into play, and try and eliminate or at least minimise any production hiatus if that had to be the case.
Okay, well, let's talk about Toliara, because obviously this DFS2, the numbers are vast. So maybe run through what you've come back with on this one, because there's been some significant increases, and maybe let's discuss how you take it forward.
Yeah, just to put it in context, I mean, we released the original DFS back in December 2019. Showed a really robust project, NPV 650 million post-tax, sort of numbers, all US dollars. But we'd always anticipated the potential to expand the project over time. Didn't bake that into the DFS at that time, largely because we had a sense of what the market could absorb based on our read of the tea leaves at that point, and thought that was a sensible volume that we could get into the market. What's happened subsequent is we've been able to incorporate the results of a significant portion of the drilling we've done over 2018 and 2019 into an upgraded resource. And so our ore reserve went up to around 900 million tonnes, which is about a 45% increase. So we had significant additional material to work with. The resource is still 2.5 times that, so we've still got a long way to go until we're fully utilising it. But the other thing that's happened is we've got a better read on how the market is looking over time, and the structural short supply, how a lot of our customers are thinking about supply. And we've been engaging in joint venture conversations and understanding the importance they see in facilitating new supply and putting their foot on supply. So we feel much more confident in our ability to move a larger volume into the market. So we've taken the opportunity to release an updated DFS, which builds on that resource, incorporates that greater market opportunity. And what that's produced is a project with an NPV of over $1 billion now, an RC ratio, so revenue to cash cost ratio, which is really the measure of its global competitiveness, up at over 3.5. Just to put that in context, Kwale, which is one of the best projects operations in the world, it got to its peak at about 2.8. At the moment, it's about 2.5. So very, very significant operation. We've extended mine life. We're now out to 38 years in this DFS2. Over that 38 years, net cash of just short of 6 billion. And it's a really robust project that is it's really reinforced what we always thought was the massive opportunity there, and it's just reinforced that. Now we've kind of parked all of that study work. We've taken it as far as we can. We've taken the funding discussions and debt funding as far as we can. The whole focus now is just on engagement with government and, to a lesser extent, community, except to the extent that that's relevant to pushing government. It's all about getting the government deciding it's ready to move forward. Absolutely.
Like I say, some pretty big numbers in there. I guess you're not concerned about how you get this thing funded, so people shouldn't concern themselves too much about that. And it's also multi-cycle, so it's very attractive for any potential partners you may want to bring in too, I suspect.
It's a world-class project, and you take the philosophy that world-class projects like this ultimately get funded. How all that comes together, there's still quite a bit of work to do in that. The CapEx is not insignificant. The total funding requirement for this project is around $700 million US. So, it's a lot. We have done a lot of work on debt facilities with our sort of relationship lenders and a lot of the DFIs and the IFCs of the world who are very keen to participate. A lot of appetite. So we're comfortable that a 60% sort of debt gearing ratio should be at least achievable. And then we're looking at a material joint venture participation or some variation thereon to provide another big chunk of the funding. And then as soon as we've got clarity on FID for the project, the market could expect, based on what we've been communicating as our capital management strategy, that the dividends we've been paying, we've basically been liberating all of the cash coming from Kwale over the last year. Could expect that would be turned off and applied to funding the balance of the Toliara development.
I'm surprised that you're aiming for 60%, not higher, given the track record and the cash being spun out of Kwale. Is that just a conservative thought, or do you have ambition?
Look, it's a combination of a few things. It's a starting hypothesis. The project itself has significant ability to carry greater debt than that. It really comes down to your level of comfort, with levels of gearing. So we have the ability to flex it, but we just need to see how that overall package comes together from a risk profile point of view. We learned some valuable lessons back during the Kwale years where we significantly debt funded that to 60%, and then we went through a significant downturn. And while we never fell sort of foul of our lenders, it certainly created some challenges and some heartache over a year or two.
Okay, well, let's talk about the conversation with the government. Obviously, that's been sort of, in process for a while now. I think COVID's come along and perhaps, delayed things a little bit further. But have you been able to advance the conversation since I last saw you?
Yeah, look, I mean, if you take a big backward step, the challenge, or part of the challenge that we have, is that Madagascar has had two very large mines. We would come along as the third development, and we're a distant third behind the first two. The first was Rio's QMM operation, and the second was the giant Ambatavi nickel cobalt development, $9 billion development. Neither of those have really delivered quite what the government would have liked and expected at the time because of challenges with profitability. They haven't generated the tax take. Perhaps the royalties haven't been what they would have liked. So there's been this sort of sense of disappointment. And so that creates a bow wave where you've got a government that sees its next big mining project coming along and wants to make sure that it benefits appropriately from it. Completely legitimate, sensible position for a government to take. The second thing that then layers over the top of that is a relative lack of understanding of the realities of mining economic participation in terms of what is required for a country to be competitive to attract that investment. So back in December 2019, the government actually threw out a draft mining code revision that went from a 2% royalty to introducing a concept of a 20% production share, which is the equivalent of a 20% royalty. That very quickly got withdrawn when there were howls of protest from everyone from the World Bank down. And so one of the challenges we've had over the last 18 months been progressing this discussion has been getting or seeing advice getting injected into the government side of thinking. And, we've had the IMF in there, the World Bank in there, and the thinking has unquestionably moved to the point now where we've relatively recently seen some draft changes to the mining code that have a 4% royalty on products like ours. So moved a very long way. That's not out of step with the discussions we're having. So we're sort of, I think we're heading towards an outcome that's going to make sense for all parties. The other thing that comes into play with these sorts of projects is a big capital investment like this is a political chip for a president to play, and they've got to make the political calculations as to when it's the right time to step forward with that. And so they're all factors that impact on timing. But we're at a point now where we've put our best foot forward. We think there's an outcome there that can be a win-win for both parties. It's really now a question for when the government decides it's the right time to step forward. Certainly, everyone that matters is telling the government that time is now.
Right. But you're not making any predictions. In terms of just setting expectations for your shareholders, anyone looking at this project, you're not putting any demands.
We've very clearly stepped away from making predictions. We made that decision back in April last year. We said, look, we simply don't have sufficient clarity on it or control to be able to say that's when the FID is going to be. Having said that, the definitive DFS2 that we've just released is based on an assumption, if you like, of an FID at the end of December next year. In order for that to be a reality, we would need to see fiscal terms and the lifting of the suspension agreed by the end of January of 2022, because we've got about 11 months of work we need to do to get to that FID. So that's the assumption that underpins the DFS, and certainly something we'd very much like to. For sure. So just just setting expectation. That's it, right? So a decision needs to be made. We're not going to put a timing on that one. It could be next week. It could be end of next year. Who knows, right? Let's say there's a thing. Then there's some work that you've got to do. 11 months or so work that you've got to do to get to FID. During which time, if you haven't already done so, you're sounding people out about the financing, getting financing into place. You'd expect at the point where you got a financial decision to make that you'll have subject to type agreements with funders, or is there still a lot of work to do? Our idea at FID is the point at which you're ready to push the button and start building because you are funded.
Okay.
So we've done a lot of work in progressing both the debt and taking conceptual JV discussions forward to the point where we'll take them as far as it makes sense to, until we have one, clarity on fiscal terms and therefore economics, and probably more importantly, timing.
Okay, so I guess it's the interesting bit could be the theoretical JV type conversation in terms of what sorts of companies and where they are in the world. That would be interesting to start to understand at some point further down the line. Okay, and then the build period is what?
26 months,
26 months.
From go to woe. So from FID to waving goodbye to the first vessel.
Okay, so if we start tomorrow, just over 3 years, and you could be in business.
So based on the DFS, so let's say we get the fiscal terms sorted out and suspension lifted in January, FID in December next year, first vessel will be disappearing, call it March 2025.
Got it. Okay, understood. I think that's just worth understanding there. Between now and then, and given you're producing cash, do you feel under any pressure by your shareholders or your institutional investors to say, well, maybe just a little bit of M&A to kind of bump that revenue up now might be attractive to us? Or do you think, actually, given what the financing that you've got coming down the line, would that be just too much pressure?
Look, as you would appreciate, shareholders come in all sorts of different flavours with all sorts of different views on what are your strategic imperatives right now. There's no question that as we've sort of been walking up towards that end of the defined mine life for Kwale, and we're becoming increasingly dependent on exploration success, and we're seeing Toliara stretching out. And potentially now introducing a hiatus in cash generation between a Kwale and a Toliara coming on, and the fact that we don't necessarily control the timing around Toliara. We're certainly having a pretty close look at how we might go about expanding our option set to give ourselves a few more chips to play in the way those pieces fit together. So it's certainly something that's exercising the mind at the moment in how we complete the puzzle.
Right, and just to help people understand the sorts of pressures, not pressures, the thinking that your board goes under is like, if revenue did drop off at Kwale for whatever reason, because you're waiting on a couple of things there, and Toliara will take, as long as it takes, does that, for you as a business, for you as a CEO, cause problems in terms of future funding? Because if I'm looking at your, revenue projections and they're a bit wavy, I'm a little bit more nervous about having the conversation with you. Is that a problem you're trying to fix, do you think?
Oh, look, it's certainly not ideal to go from being a strong cash generator to not generating cash. How big an issue that is really depends on how long it is. How long are you surfing between, and how much clarity do you have about how far away the next lily pad is, and how your funding packages come together. But the more that stretches out, the more uncomfortable you become. And I guess one of the other things that plays into it is, our objective had always been to go from being a single asset, single jurisdiction company to, minimum. Next step was 2 assets, 2 jurisdictions, 2 cash flows. Even with Toliara coming on, Kwale, falling away, even if everything lines up again, we don't really want to go back to being single jurisdiction, single asset again. Just moved from Kenya to Madagascar. So we're constantly thinking about how we create that transition to multi cash flows in the most sensible way, and in a way that presents the sort of profile that keeps shareholders comfortable.
Yeah, and so I guess that kind of, because we've had questions sent in about, should they buy this company, that company, whatever, and they're all at different places in terms of their growth. Some production, small production, but production nevertheless, and that again flattens some of these curves potentially. But again, addressing the same sort of problem that you're trying to solve here, does that sort of give us a clue as to the sorts of options that you're looking at in terms of the size of the companies, or possibly the fact they're going to be in other jurisdictions?
Look, I mean, I wouldn't give any steer on size or jurisdiction. I mean, because to a certain extent for us, we're kind of jurisdiction agnostic in the way we think about things. We're very much value creation led, project led. Is it the right opportunity? And then you look at the jurisdiction. Is it somewhere we think we can operate? And more to the point, is it a sort of asset palette that solves the for the current gaps in the jigsaw puzzle? And we look at lots of things and think about lots of things. So it's far too sort of premature to be speculating about the shape of that at this stage. It's just a thought process that's becoming more into clear focus.
Yeah, I just think if with the skill set that your management team has got now, with the track record that it's got now, it's obviously attractive to funders if you were to talk about that. That's not a big shift in terms of an idea, is it?
No, it's not. But things have to have the appropriate shape to them to be able to sensibly talk about it. Because there are vastly different outcomes, and I don't want people jumping to conclusions about what it means when it's there's not that degree of resolution to it yet. As soon as there is, and then there is a clear sort of pathway forward for us, and the shape of what we're trying to do with that, we'll be stepping forward with the story.
Okay, so you're not looking to create headlines just for the sake of the share price. You're under no pressure.
No.
Right. Okay.
That's not our style at all. We're very much sort of keep it straight and clear. Let's not lead with stories and then backfill with reality. Let's walk everyone forward on the basis of what it is we're doing and what we're going to be able to deliver. Okay, so that said, what's the big thought you want to leave your shareholders and people looking at this project with? Yeah, look, I think the big thing for our shareholders is that we are very heavily focused on extending the mine life in Kwale, landing these fiscal terms with government in Madagascar. We do have a reasonable basis for believing that we're going to get there with both of them. Timing is the thing that's more so from a Toliara point of view that's uncertain. And in the interim, we're having a look at how we best broaden our option set. To deliver that sort of multi-asset, multi-jurisdiction company that we've been very clear we're looking to get to.
Okay, but cash profile falling off, but not well within bounds, and you're comfortable.
Yeah, I mean the cash profile for the next few years, at Kwale still stays extremely robust. When we move through to Bumamani and that area, it does drop away, being lower grade, and then we'll see what the exploration outcomes look like. It might be a relatively short period that we see that cash drop off depending on what we find.